Now, in terms of pulling up a symbol, getting into our trade tab, and setting up that trade, the first thing you're going to want to do when you're looking to set up a trade is, I know a lot of people like to maybe check out a chart on a symbol before placing that trade, but the first thing you do before even looking at the chart is to go to our top panel here. This is going to be the platform's active symbol. And in the top left here, this is where we can type in the ticker symbol or the name of the company that we want to trade. So for example, if we wanted to trade Apple, conveniently it's the first item in our list there, but we can type in the full name Apple and see the ticker symbol and the name of the company here and click on that. And now as you'll notice too, we had our chart tab open, which you can find on our left side panel. But once you update your platform's active symbol, that's also going to update the chart or trade tab or whatever window you're currently actively using. So again, just for example purposes, if we were to say go to SPY or SPY, I could type in SPY, and now that's going to update the rest of my platform for SPY's information. So now we're looking at a chart on SPY. You can use the top of the platform on that symbol search in terms of pulling up symbols, but additionally, our left side watch list as well makes it super convenient for quickly going through different symbols, especially if you're trading a handful of symbols. In this case, we're just looking at the technology watch list or symbols in our technology sector. But for example, if I wanted to view a chart on Microsoft, I can see it here on my left side panel here, just this line item, or NVIDIA. What's nice is that all you got to do is just left click on the symbol and selected Microsoft. You'll notice the top of the platform is listing Microsoft, and we're looking on the chart on Microsoft. Or NVIDIA, click on NVIDIA. Now we're looking at a chart on NVIDIA. So that's just navigation in terms of getting the symbol that you want to trade and or analyze. And then once you're ready to place that trade, and I know Ben was talking about maybe starting on Tesla, so we can type out Tesla, its full name, or TSLA, and we can pull that up or the chart of that. And then once we want to place a trade on it, we'll click on the trade tab here on the left side panel. And now looks a little bit different than what you normally see off the bat, and that's because I was in a couple different windows. But at first, you're going to be in the trade mode table. So by default, you'll be taken to our table mode. And this is where we can find all of the different options expirations that we can trade on this symbol based on their date, and then also their days until expiration. So in this case, we have the May 9th expiration. So May 9th weekly or May 16th. We can quickly see that May 16th is 10 days from now. So 10 days until expiration on that row. And then also just some other information. You can see the implied volatility of that expiration and the expected move of that expiration as well right here. But that's just getting into our trade tab. And then in terms of setting up our trades, and I'll hand this off to Ben now, we're going to be going into how you can set up a ratio spread or any kind of option strategy in general.
Sure. So just for those that aren't familiar with the ratio spread, generally it involves buying a debit spread and then selling an additional short option for the short strike that would be a part of the short option strategy. So if you're not familiar with verticals, if we're on the put side, we're buying the lower, buying the higher, selling the lower, and for the calls, we're buying the lower, selling the higher option. So maybe Christian can show us an example of how to pull that up. But the nice thing here is for ratio spread, we do have an option to pre-select the strategy. So you won't necessarily have to build this from scratch every time. So on this strategy selector that Christian's pointing at, if you click this little down arrow, it's going to bring up all of the possible strategies that you can do on tastytrade. And any of these buttons that say long, if you push them, it'll allow you to do short, assuming there is a sort of short alternative. And for any of these buttons that say call, you can change it to put. And then once you've got the trade that you'd like to place on the table, just press go, and it'll put an example trade there. Uh, so you'll see we're selling two 280s and buying a 277.5 call. Now, there's another way to pull this up if you don't like to use the strategy selector, and that is that you can just select both of the strikes that you want in the spread. By default, it's going to put everything at an equal quantity. And then you can double click in the order ticket the leg that you'd like to adjust the quantity for and use the quantity arrows. Um, so right in the center of the order ticket there, and that will allow you to adjust the quantity. So those are kind of the two ways to pull this trade up if you want to get one started.
Exactly. So yeah, you can do it manually, just like we showed there, where you're clicking on the bid and ask prices to either buy or sell the legs. And then you'll notice too, you can either do it from the actual trade table window. So you notice this kind of like gray highlight over the leg here, or in the order ticket at the bottom as well. You can adjust the quantity as well. So you can left click and select that and then change the quantity arrows, and you'll notice it goes from one contract to selling two contracts. And what's nice too is you can go all the way up to an 8-to-1 ratio if you really wanted to. But especially, for those of you that maybe are looking to trade butterfly spreads as well, this is a way that you can manually set it up as well. So it's very, very similar where, with the butterfly spread, maybe we're buying another leg here, but just for classic ratio spreads or kind of a 2-to-1 spread, that's how you'd set it up. But sorry to interrupt there, my friend. Keep going.
No worries. So this example trade we've got up here is a call front ratio spread. And for a call front ratio spread, we don't have any risk to the downside, and we do have some risk to the upside. And if you want to take a look at what these trades look like, the sort of theoretical profit and loss, we do have a curve mode that allows you to view the profit and loss for these trades based on a price of the underlying. So you mind switching to yeah. So
Yep.
at the top, you'll see the different trade modes. And if you switch to curve and then make sure that analysis button is selected, you should see some red and green zones that indicate what this position will do at expiration. And so you see the max profit on these types of trades is when you're right at the short strikes. So that's where the top of that graph is there, and then there's no risk to the downside on these because your short options are going to expire worthless. Sorry, short options you'll realize the credit from them, and the long option will be worthless at that point. So as long as you're routing these trades for a credit, there's no downside risk, and the same. It's the opposite for puts. So as long as you're routing these for credit, there's no upside risk.
Exactly. And what's nice too is that while you're in this curve analysis mode, and just to kind of point out if you're seeing some things different or, if your screen feels a little bit cluttered, but at the top of our analysis mode, we have some different selections in terms of what we want to see right now. And the things I'd recommend is if you want to view your position at expiration. So based on the price of Tesla at expiration. So this is the price of Tesla on our x-axis at expiration. We can go to lines and make sure that we just have at expiration selected. And then we can also go to the zones and select at expiration. You can have these curves as well. It's the bell curves in terms of looking at the standard deviations, but personally, I'll just deselect those for right now. You can mess around with the Y scale. You can view current quotes as well. And then this info box is actually showing us the different profit or loss at expiration based on the price we're scrolling over. So maybe if you wanted to see, hey, where's my break-even point on this trade? You can scroll your mouse over where our P&L graph crosses the x-axis, and we'll see that our break-even point is right around $295 for this trade, based on how we're set up. On top of that as well, and I know someone was asking, hey, how can I check out how my position might be affected by time decay or implied volatility. And I saw someone was asking, how do you get that box? That's just this info box right here. So you see this box that's moving around. If you go select this, that will get that info box to show up. And what's nice too is that before I even get into that, we don't have to go back to our table mode to adjust our trade, drag and move around our strike prices. We can very simply just left click and drag and move our strikes in this curve analysis mode. So if you're looking to set up your trade based on the kind of curve here, makes it a little bit easier. And then in terms of analyzing our theoreticals, what's nice as well is that if we wanted to analyze our theoreticals, the first things we're going to want to do is go to P&L Theo on our lines and then change our zones to Theo as well. So we're looking at theoretical values based on some parameters that we're going to set in our right side window. So right now we're looking at our theoretical profit or loss graph. I believe this is just looking at today by default. So what would be our theoretical profit or loss if Tesla were to move to, say, have a massive move to $245? That would be, we'd probably be at a profit or loss of about $740 on this trade. Or conversely, if it were to trade up to $300, we'd probably be at a loss of around $1,300, $1,400. And now, how can we change around and see, hey, maybe I want to see how this looks like in a week or 2 weeks, and or how it looks like if implied volatility were to increase or decrease. Make sure you open up this right side panel here. So there's an arrow in the top right of our screen. Sometimes it'll generally just open by itself. But if you open up this right side, so again, just showing you one more time, this arrow in the top right, go ahead and open that up. That pulls up our analysis mode tools. So you see there's some tabs here. We're in analysis mode. We'll see in the analysis mode tools, we can see the strategy that we are looking to place. We can also see some selections at the bottom. So this is where we'll go in to evaluate at a different date if we want to. So if I drag our strikes back a little bit and then go pull up our analysis mode one more time, we can go down here and say, I was talking about, hey, what would be our theoretical profit or loss today? If you wanted to, you can tick up the date and say, hey, what if it were, what was it, the 6th today? So maybe if we do the 13th, a week from now. So you'll see a week from now, how does my theoretical curve change? Or I could see maybe right around 3 days until expiration. How does my profit or loss curve look like based on the price of Tesla? So that's just looking at the date. You can also pull up a calendar and see, okay, yeah, this is, if we go to the 23rd, that's at expiration. So you'll notice that our theoretical graph pretty much it looks exactly the same as it would, just with a little bit more curviness as our expiration graph. But we can see all the dates in between to see how our strategy progresses as time passes. And then in terms of adjusting volatility, you can use per contract IV if you want. This might be a little more applicable for other strategies, but for this in particular, we can just unselect that because we're just going to say, hey, I just want to adjust the implied volatility for the options chain in general or just the symbol in general. But if we wanted to see a increasing volatility for this options expiration in Tesla or this the volatility in Tesla increases in general, I can go down here and tick this up and see how increases in volatility impact my strategy or my theoretical values. So you'll see it does make some small changes in our curve here. You can also type in a number if you really wanted to. So you could go volatility decreases by 25%. You can see how that adjusts our position. So hopefully that answers your question. I can't remember who asked it earlier, but this is how you can analyze your position, mess around with theoretical values, and view the impacts of those changes. And now this is going to work for ratio spreads. It's also going to work for almost all of our classic strategies. But as I'll get into in just a moment, this analysis mode might or it won't work when you're looking at multi-expiration trades. So when we get into looking at calendar spreads or diagonal spreads, it's not going to work. The problem here is that our analysis mode graph is looking at a two-dimensional model. Once we get into calendar spreads or diagonal spreads where we have multiple expirations, that's making it a three-dimensional model. So this is something that our development team is looking into to try and get a bit of a workaround so that you can play around with these metrics and still get your P&L graph for calendars and diagonals. But for right now, when you do go to view this screen here, it's not going to give you this same information you're looking for. So it's a bit of a limitation based on our analysis mode and its two-dimensional model, but at least for ratios. And, if you were to do vertical spreads or, butterfly spreads, it all works just as you would intend. But if you are going to say a calendar spread like this, actually it does. Look at that. It actually did work this time. So maybe if we look at, let's see. No, we don't list a diagonal on here, but it can work occasionally. I'm just looking at some of the questions before we get going on. See the question, is this demo going to be recorded? Yep, we're going to have a recording of this demo. We'll post it to our YouTube channel. I see some other questions. We'll get to the Q&A in just a little bit. But I just want to show you how we can set up calendars or diagonal spreads are the easiest way to do that. And I know we're getting a little pressed on time, but I can also show you some great resources to get some more information on how to trade these strategies and manage your risk and or expiration risk revolved around them. So if we're looking to place a calendar spread, again, we can use our strategy selector at the top like I did just earlier. So we could do a long call calendar. Select it here, go long, call, click on go, and that's going to set up a calendar spread for us here where we're selling the front month here and then which is in 17 days and then we're buying about 45 days until expiration at the same exact strike price. So we're selling the 280 and May 23rd and then we're buying the 280 on June 20th. So that makes it a little bit easy, but it's auto selecting which expirations we want to trade. And if you were to, left click a leg and click the expiration buttons in our order ticket, it works okay. But I would say in terms of setting it up, it's way too many clicks as of right now. It's a little too many clicks for how you might want to set this up, especially if you already kind of have an idea of what expirations you want to trade. The easiest way to go about setting up a calendar spread is going to be starting by going in the top right to the strike selector. This is just listing the amount of strikes that you see on a certain expiration. So for example, if I were to click on 10 and open up our May 16th expiration, we're only seeing 10 different strike prices. Now, if I were to change this to all, we're going to see all the different or strike prices. So we can scroll all the way through and see all the different expirations, or not expirations, but different strike prices for this May 16th expiration. Now that's super nice to see all these different strike prices, but if you wanted to trade multiple expirations, it's going to take a lot of scrolling. So that's where you might want to change it to say 16 or 12 or 10, and then you'll be able to pull up one expiration. So in this case, maybe let's pull up, what was I looking at earlier? Maybe PayPal. Not a bad scenario to look at. We can pull up PayPal here, and this is a relatively low IV rank or implied volatility status on this symbol. So when we're looking at IV rank, it's pretty much a percentage look at where implied volatility has been on this symbol over the past year based on previous periods of implied volatility. So right now, 14.3% is on the very low range of its implied volatility over the last year. Especially with all the tariff stuff going on and elections, yada yada. It's definitely a little it's interesting that PayPal is relatively this low on its volatility. But when we're looking at setting up maybe a long call calendar spread, we do want the implied volatility to increase on this strategy. So it may be beneficial to look for symbols that are having relatively low implied volatility to its norm in the hopes that that implied volatility does increase and benefits our strategy. So PayPal might not be a terrible example to start with here. And we can open up our June 20th expiration or 45 days until expiration. And here we can then look to, we can sell this 70 strike right around at the money if we wanted to. And then what's nice is that we'll be able to scroll down and find a new expiration. So this is about a month and a half out, and then maybe we'll look to do maybe another few months out here and buy the 70 strike on the September 19 expiration. So this is a calendar spread. We're selling one expiration, buying another expiration later out. Now, kind of the goal here is that time decay does somewhat play in the factor here, as long as time decay eats away at your short strike or your short call at a near expiration faster than it does on your later expiration. So when we're looking at a long call calendar spread, we're kind of looking for the underlying to trade at the money or near our strike price at expiration. Now, if we were to go into the curve analysis mode, and if we look at P&L at expiration, it's just going to show this flat line. This is what I was kind of talking about earlier, where you're not really getting the full picture that you're looking for. But if you were to go into the theoreticals, this is where we can kind of see a more clear picture of what that profit or loss graph would look like, where essentially we're looking for the price of the underlying to trade right around where we are buying and selling our strikes. And we'll see as we adjust the different metrics as time decay plays in our favor or as time passes, you'll notice that our profit zone increases, our max profit is starting to increase. And what's a little bit tough about looking at the max profit or max loss on these strategies, as well as kind of that three-dimensional model where we have two different expirations, you can't necessarily exactly pinpoint what the max profit is going to be on this strategy. But so that is kind of how we can set up and view our calendar spread. And then once you're ready to ship off this trade, all you got to do is just go to review and send, and then you can send off your order. So now we're working our order. Looks like we place it right around the mid price. So this is just a good example anyways. But if we were to go into our positions tab after placing our order, say it doesn't get filled right away, and we're like, oh, okay, well, I just kind of want to get filled at the best price right now. We can always go into our positions tab, right click on this order we just placed and go to replace. And we'll see here kind of the range at which this is trading. So this is looking at NBBO, National Best Bid and Offer. And we'll see that, the mid price is about $3.41 debit, all the way up to $3.47. So the more we pay to open up a long strategy, the more likely we are to get filled. So we are to tick up our limit price here to maybe 345, kind of in between that mid and that price. We can ship it off and boom, we get filled. We got filled right at our limit price there. So now we have our position open and we can view our position in our positions tab. And I saw someone's question earlier came up about grouping positions. So, and then, we were talking about our little ratio spread. So I'm just going to show you real quick how fast we can set up a ratio spread if we wanted to. So I can go in here, ratio, boom. Maybe we'll do it like that. We could look at the curve mode, analysis. Okay, checks up pretty nicely. And then we can go ahead and ship this off. And then our order's working. Mid price 1484. Maybe we need to tick it down a little bit, get a little bit less on this, tick it down a bit, boom, get filled. Limit was at 1479. We got filled at 1482. So we got a little extra 3 cents there. Price improvement on our order. And now we have two different positions. So we had that ratio spread that Ben was talking about earlier. And then we have our calendar spread here in our positions tab. And what's nice is that we do have a feature here. And if you were to go to the top of the platform to group by, we can do group by order chains. And by default, when you have a vertical spread or butterflies, just long put call, or if you're rolling positions, it'll list the strategy by itself when you group by order chains. When you're doing calendars, it just says custom. But if you do want to name these yourself, you can go to group by custom at the top. So just one more time showing you this selection up here. Oops, moved around my entire recording there. But if we go group by custom, and then you left click and select the legs that you want to group, and then right click, then you can go to group positions here, and we could say it's a calendar, and we could say calendar example. So you can name it whatever you want, and then you can click on group, and you'll notice the name for this strategy updates at the top. Same goes with here. We can go left click on our ratio spread, go to group positions, and then we could say ratio spread example. So if you do have multiple ratio spreads, multiple calendars on the same symbol, or just want a little better organization as you're looking to view your positions in the positions tab, this group by custom is super, super useful. And great. So, and then just to show as well, if, for example, maybe we're looking to trade calendar spreads, maybe say PayPal were to trade up to maybe $75 or something like that. One thing you could do too, and just for example purposes, this is just theoretical scenario that say PayPal we place this trade at the 70 strikes and then PayPal trades up to 75. You can go right click your short call. So maybe we would want to, roll our short call up to the 75 strike to kind of get some more of that upside. And also then we can kind of establish a bit of a diagonal as well. We can go here to roll strikes and you can go up or down. So in this case, we want to roll it up. We'll go into our table mode. But in this case, we could then sell maybe the 75 strike where PayPal is trading theoretically, and we could roll that trade. So we're closing our 70 strike short call. We're opening a 75 strike short call in one order, and then we could go to review and send, ship that off. And again, looks like we just placed it the mid price. Gonna need to adjust that maybe a couple cents up, and boom, we get filled. And now you'll notice here that our grouping kind of got split up since we have a new position as well. But what we could do is go back here, ungroup our position, reset it up, group positions, diagonal, and we could change that. So that's how you can kind of adjust, roll your different strikes. Again, imagine too, maybe we did roll this and make it a diagonal, and then we're starting to approach our options expiration on our short leg or our near-term expiration. You can also right-click and go to roll expirations and roll this expiration out to maybe, July or August. So maybe we could go out to August if we wanted to and roll our expiration that way. So, and you'll see here is that we're closing our June expiration and we're opening the 75 strike on our August expiration. So that's how you can manage or roll your expiration or your strike price on your different positions later on. And that kind of covers a decent chunk of what we wanted to talk about today. There are some other tools that are super, super nice in our right side panel. So opening up our right side panel too, we can go into here to order chains, and we will be able to see a tracking of our different trades that we placed on a symbol. So for example, we had that calendar spread on PayPal that we opened up here for debit of 345. We then rolled it for another debit, and then we now have our current open position. So what's nice about this is that it's going to keep track of our profit or loss with all the different adjustments we made to our trade. And even then too, we made these adjustments pretty darn fast, but you can right click on your order chains here and go view market state snapshots. And in this different window here, you'll be able to see when you place these different orders, what the price of PayPal was at. So in this case, again, we did it pretty fast, so the price didn't move that much. But say you're doing this a month at a time or so, and you want to backtrack and see, hey, what was the price of PayPal when I rolled this trade, or when I closed this position, or when I made this adjustment? You can go back here in the market snapshots and see where the price was when you made those adjustments. Or you could see, hey, what was the implied volatility for PayPal when I made these adjustments? Or what was the net delta on my position when I made these adjustments before and after? So super, super nice tool as you're looking to place these different options trades, and it'll make it a little bit easier for backtracking, or even then potentially going to close a position where you can click on your open position and go ahead and close it from there too. So we did a lot of talking, and I myself did a lot of talking there, Ben. So sorry, but that covers a decent chunk of what we wanted to talk about today. But did you see any questions in the chat there, Ben, that you want to talk about next? Gonna kind of give it a backtrack here and see.
One thing to add about rolling, you'll notice if you select the quick roll or roll expirations, roll the date, that there's only a few options given to you. It's like the next four sort of available rolls. So if you ever want to roll something further out or to different strikes that aren't showing up automatically, you can just left click both legs of the position or all the legs of the position, and then right click and select close position. And once you have that closing order on the options table, you can just select the legs of the new position to open. And as long as there's fewer than or four legs or fewer on that ticket, then it should allow you to place that as a rolling order.
Exactly. So like you're saying here, when we go to close our positions, or buying to closing, selling to closing our legs here, we have our closing legs, and then maybe we want to, roll this out to the November 21st expiration. We could then go and buy the 275, sell the 285, right? 285, double click that, change the quantity. Now you'll notice here in our order ticket below, we're selling to close, buying to close our June expiration. We're buying to open, selling to open our November expiration. So that is another way of more manually setting up the expiration that you want to roll to. And then kind of the last piece as well. So very good point there in terms of rolling expirations. But if we were to go back in here and go roll expirations and just click on the farthest expiration, we can as well select our new expiration. So in October 17th, and then in the order ticket down here, you see these expiration buttons. You can click that as well, and that's going to change the expirations out as well. So that's another alternative in terms of changing your role. So there's quite a few different ways of doing it. It just comes down to personal preference on which you want to do. And then if you're looking to place a take profit and stop loss order on your position. So in this case, we have a vertical spread on Apple. I can group this together, call it vertical. So we have a vertical spread on Apple right here. In the positions tab, all you got to do is just you can left click on the strategy name to select both the legs. You can individually click on each leg as well if you want to. So in this case, I can just click on the name vertical here. It's going to select my legs. And then you right click that. Oops. You're going to right click that. And then at the bottom of this drop down window, so we got quite a few different things going on, but at the bottom, you can click on bracket, and this is where you can set up a take profit and stop loss order. So maybe we want to say, hey, I want to take profit here at a 50% profit point or a estimated profit loss of about $51, whereas maybe my stop loss, I'll be a little less conservative and say, or maybe stop loss around 70%. So that will set up our stop order there. And it'll have a stop loss at about $71 loss on the position. We can then go to review and send, get a quick breakdown on our stop order or our OCO order there, and then click on send. And now we'll have this order linked up to our position that's grouped. At any time, we can go back and view our complex order. We can cancel the entire order, or maybe you're like, hey, I want to keep the stop loss, but I want to get rid of the take profit. You can always select just the take profit up here at the top, cancel that side, and we still have the stop loss working as well. You see the question coming in. Can you set up a stop loss based on the delta of strike prices of the underlying price? As of right now, you can only set up orders based on the options price. Setting up orders or conditional orders based on either the deltas, Greeks, or the stock price itself or ETF or futures price. So say you're like, hey, I want to close this position when Apple reaches a price of 190 instead of saying, hey, I want to close this position when my options price reaches a certain hit point. We don't have those orders just yet, but that is something that's actively in discovery that we're looking to add to the platform soon. So it is quite an intricate, what is it? A bit of an intricate back end implementation, especially with the data and the accuracy of orders sending off based on those metrics. So it is something that we're trying to work on. We just want to make sure that we do it right. There is the opportunity for a lot of issues with having those kinds of orders. So something that we didn't have in our infrastructure before. It's a bit harder to build out right now based on how we've built our platform, but it is something that we are looking towards adding. It's been asked a lot, and we do want to get something in there. So I know too, we were looking at adding in better alerts as well, so you could alert when certain metrics are hit. So, like, if you wanted to have an alert sent to your phone when the delta of a certain option reaches a point, that is something as well that we're looking at to add that was a little bit easier to implement. And that way, at least you could have an alert that says, hey, this price got hit. Do you want to, and then you can go in and close your position. So it's a little bit of a workaround for right now, but yes, we are looking towards adding that. And I see the question, does bracket orders work for futures as well? Yes. So if you wanted to, say, place a bracket order on a micro e-mini SPOOs, you can simply just, when you go to buy a contract, all you got to do is when you're in your order ticket. So to buy a contract, I typed in the ticker symbol for micro e-minis. And then I just clicked on the ask price here at the top to buy one contract. And then in the order ticket, in the top left here in the bottom, see bracket there, you click on that. And now we can set up, instead of an OCO order where we're setting up a take profit and stop loss on an existing position, this is actually an OTOCO, which is a one triggers, a one cancels the other. So we're saying, hey, I want to open this position based on a certain limit price. don't fill me unless it's this price or better. And then once this position is open, I want to have a take profit and stop loss that are contingent on each other. So, if the take profit gets hit, then it cancels the stop loss. If the stop loss gets hit, cancels the take profit. So it's all linked up. Okay, it looks like we're getting near the end here. I'm just gonna, again, any more questions, please feel free to toss it in the chat. I'm going to pull up in the background, though, a little bit of our website here. So if you are on our website, let me get rid of my drawing there. You want to find out more information on the strategies we talked about today, or just any of our option strategies available on our platform, you can go to our resources section in the top section here and go to learn. And then in the learn section, and let's see if I can scroll this up a little bit. In the learn section here, you can type in, maybe we talked about calendars, right? So we can type in calendars here and we'll see a couple different articles talking about how you can set up the different risks surrounded, the profit or loss, and all the different examples that you might want to know in terms of setting up a calendar spread. And then also, I believe we have, let's go back here. I believe we had on ratios as well. Do we have one on ratios yet? Looks like we're still working on it, but we have a lot of other great articles here in terms of getting familiar with different option strategies. Also, too, under resources, we do have Tasty Trade courses. So if you're new to the platform and learning to or looking to learn about how to navigate and place different trades, our Tasty Trade courses section is super, super nice, where it's just a bunch of different tutorials on our different platforms and how to place these trades. A little bit slower, a little bit more in detail on some different sections. So it's just nice material to check out. And then lastly, too, in terms of finding our contact information, if you ever want to get in contact with us, at the bottom of any of our website pages, you can go to questions, you can go to contact us here, and this will take you to our help center, which again has a ton of more great information tutorials on how to navigate the platform. But under contact us, you can find our phone number here, toll free for the US. If you're, I saw someone say France earlier. If you're calling in from France or any non-US countries, you can use our local or international number. And then you can find all of our different emails as well. So, if you're trading futures, have a specific futures trading question, you can email directly to futures. Got a tech question, you can reach out to tech. You want to see some new features and functionality, you can always shoot us an email to feedback. That's where we get a lot of our inspiration for what we want to add to the platform. And then lastly, as well, if you're one that does not like to call in or talk on the phone, maybe there's a language barrier as well. We do have a chat functionality on our help center and on our website. This little chat bubble in the bottom right. If you go in here and then go through some of these prompts here, or if you just want to get a quick little Easter egg here, if you want to just get to chat support right away, you can always click on log and help as well, and that'll get you to our chat functionality right away. So it'll close this window and reopen a new one, type in a couple information, you'll get to our chat support.